Hello everyone, I'm Alan Cunningham from The Deal. I'm at Huron Consulting Group's offices in Midtown Manhattan talking to John DiDonato and Hugh Sawyer about restructuring in the transportation sector. Welcome.
Good afternoon.
Let's start with you, John. Tell me, what are the primary factors forcing a restructuring in the transportation sector?
I think there's a number of significant factors that are causing a restructuring within this industry. One certainly being a reduction in volume that's driven from the general economic conditions. Two being the high fixed cost nature of the industry investment in capital equipment that is constantly needing to be replaced and modernized. And thirdly, legacy costs of the labor that services this particular industry.
I would just add, Alan, that the capital structure that exists today in transportation and logistics was built to peak. And in this post-recessionary environment, many transportation companies today are just carrying far too much debt.
From a macro perspective, what trends are you seeing having a long-term effect on the transportation sector?
I think one of the significant trends is certainly the issue of unionized versus non-unionized labor, and the non-unionized labor not carrying the legacy burden that the unionized labor is carrying. And those trends really need to be addressed. And the fact of the matter is many of these companies were restructured earlier in the cycle and may not have dealt with all the operational issues that could have been addressed in the restructuring had people known the recession was going to be as deep as it was.
And I would add to that that transportation is one of those industries that looks simple and isn't. And management teams are often faced with external factors that impact the operations of the business, external factors that are well beyond their control. And one interesting example of that is the aging U.S. workforce. Most of us that work in and around transportation and logistics today are convinced that the industry will face very significant driver shortages in the years ahead, both as a consequence of the aging U.S. population and moreover as a consequence of higher standards for certified drivers that go up and down our nation's highways. And if you think about it at an elementary level, at the end of the day, the nation's economy really does ride on the backs of trucks and planes and trains. And as this economy begins to slowly reestablish itself, the last mile into that retail channel is all dependent upon the nation's transportation industries.
And finally, Hugh, are there any other key takeaways you'd like executives to think about?
Around transportation and logistics, I would encourage management teams, lenders, and professionals to continue to think about the pace of reinvestment back into the rolling stock and infrastructure, particularly customer-facing software, the implications of NAFTA going forward, and frankly, the evolutionary process that's occurring in green-related fuels.
I think in terms of restructuring, restructuring had hit a peak in 2009. Certainly, Huron, because I think its focus on industry sectors, has enjoyed a pretty solid 2010, and that may be more unique for the restructuring industry in itself.